In this video I will show you how to trade crypto on the Phemex exchange. Why Phemex? Well, recently they introduced this new option called signal trading. If you've stumbled upon me in the past, you probably know that I'm a big fan of crypto trading bots. Actually, nowadays the majority of my income comes from trading bots, and I love it because it's 100% passive. This is something that is not available on the other crypto trading exchanges. What this allows you to do is to create a trading bot on the Phemex exchange itself and to connect it to TradingView indicator, which basically is gonna give signals to the bot when exactly to buy, where to place the stop loss, when to sell. I've been doing something similar for a while now, but it's a little bit more complicated because, like I already mentioned, on the other crypto trading exchanges there is no such option, right? So what I've been doing up until now is that I've been using 3commas, which is a third-party platform for bots, right? So I have my bots on 3commas and they are connected to a crypto trading exchange as well as to my indicators on TradingView. Using a third party like 3commas comes with additional risk, but there was no really other option until recently. Even now on the other exchanges, like I already mentioned, this option is not available, but on Phemex it is, and this is what caught my eye. That's why I started to look into this platform recently, and I decided to make a tutorial for you guys. In this video, unfortunately, I won't be able to show you this option, the signal trading, because I am still testing it. I want to make sure that it works properly, and only after that I will make a tutorial for you guys showing you how to do this. Hopefully this will be next week in the next video that I'm gonna make. I have a bot up and running at the moment which is taking the signals from my indicator, so you can see right here, for example, short, stop loss, bam, profit, short, stop loss, bam, profit, long, stop loss, profit, 1-to-1 rewards to risk so far. The shorts were a little bit better recently because we got this dump on Bitcoin, right? So this short signal generated almost 3-to-1 rewards to risk. So once I make sure that this thing works properly and it's taking all the signals and it's executing it properly, I will make a tutorial for you guys how to use this same option. For now, we're gonna focus on how to trade manually on the exchange. I'm gonna show you how to trade spot and also how to trade futures. In case you are new to this and you don't know what the difference is between trading spot and trading derivatives, well, there are two main differences. So when you trade spot, you guys cannot use leverage. What does that mean? Well, it means that you can only trade with your own money. So if you have $100 on the exchange, that's all you can trade with. When you trade spot, you cannot borrow money from the exchange, right? You can only trade with your own money. The second main difference is that you cannot short. Short trading is a way to make money when the market is going down. So basically, when all of the investors are losing money, you can profit and you can make money. And as a trader, you want to be able to do that because you want to generate a consistent income, right? You cannot rely on the market going up in order to make money, right? You want to make money all the time, especially if you want to be your main source of income, if you want to trade crypto full time. So trading derivatives on the other side allows you for these things. So first of all, you can use leverage. If you have $100 on the exchange, you can normally trade with up to 100x this amount. Now, 100x is too much. It's way too risky, so I don't suggest you do that. 10x, however, is very good. I mean, 10 times your money. So if you have $100 on the exchange, you can trade with $1,000, so you can borrow $900 from the exchange, and that way you can grow your $100 much faster, right? You can make way more money compared to when you trade spot. Of course, the opposite is true as well. You can lose your money faster compared to when you trade spot. That's why you guys need to have a good trading strategy. If you are a complete beginner and you don't know what you are doing, well, it's way better to trade spot. Trading derivatives also allows you to trade short, right? So you can make a lot of money when the market is going down. And let me tell you this, the first time when you experience this, you're gonna remember it for the rest of your life. The emotion here and the euphoria that you're gonna experience is just crazy, because the reality is that when the market is going down, most of the people are losing money. As a trader, if you do it properly, you will make a lot of money. Now let's head over to Phemex. The first thing I want to show you guys is how to open an account with our link so you can get a very nice bonus. So there's gonna be a link around this video. If you click it, you will be brought to this page and you will have invitation code right here pre-selected. You have to use this code in order to grab up to $8,800 in welcome rewards. If for some reason you cannot find the link, you can just go to phemex.com and you can type in the code yourself. Here is the code FLPWR7. Just type it in the box and then create your account. Phemex is a non-KYC exchange, so it's up to you if you want to verify your identity or not. You can start trading without verifying your identity. Just keep in mind that at some point they will probably ask you to complete KYC to verify your identity. So if you are from a country where you are not allowed to use this exchange, well, you might think twice before you deposit money and start using it, because again, at some point they probably ask you to verify your identity, and if you cannot do it, what you gonna do? Okay, let me show you first how to trade spot. All you gotta do is to navigate to this menu right here at the top where it says spot and click on spot trading. There are three ways to enter a trade. You can enter a trade with a limit order, with a market order, or with a conditional order. Now, what's the difference? Well, if you want to enter your trade at a lower than the current price, you're gonna be using a limit order. The current price at the moment of me recording this video is $54,270 for one Bitcoin. If I wanna enter at a lower price, let's say that I wanna buy Bitcoin at $50,000, I'm gonna use a limit order. There are a lot of reasons for you to wanna buy at a lower price. So first of all, you might just wanna get more Bitcoin, right? If you buy at a lower price, you're gonna get more. Also, if you are trading with technical analysis, maybe you can draw a trend line here, right? And you can wait for price to go down here and then buy, right? So if that's the case, then you're gonna be using a limit order. All you gotta do is to enter here the price at which you want to buy and enter the amount of dollars that you wanna buy with. So if you wanna buy Bitcoin for $100, you're gonna enter this amount right here and you're gonna click buy. That's it. Now, what's important to keep in mind is that limit orders are only executed when price actually reaches the price of your order. If Bitcoin skyrockets from here and it never goes down to $50,000, this order will stay here in the active orders forever, right, until I cancel it. And this brings us to the second way to enter a trade, and that is with the market order. If you believe that Bitcoin is gonna go up from here and it's not going lower, then you want to use a market order. Market order allows you to buy at the current price. So you see that here where it says limit, I can actually enter the price at which I wanna buy. When we switch to market, this field is just gone, right? Because again, a market order buys at the current price, right? You cannot select here the price. You're gonna be buying at the current price. You see here the order book. With the market order, you're gonna be buying from these first sellers right here. That's just how it works. So when you use a market order, all you gotta do is to enter here the amount for which you want to buy and click buy. It's as simple as that. The third and last way to enter a trade is using a conditional order. Now, when you switch to conditional order, you have two options here, limit and market. I encourage you guys to always use market, right? So when do you use this order? Well, you use this order when you want to buy at a higher than the current price. Now you might be wondering, why on earth would I want to buy at a higher than the current price? Well, you want to do this in scenarios like this one. This right here is what is called symmetrical triangle. This triangle is 50-50, so there is a 50% chance that price will break to the upside and 50% chance that price will break to the downside. So when you see this in real time, it doesn't make sense to go long or to go short at that point in time, because your chance is just 50-50, right? You don't know where it's gonna break. Now, what you know is that when price breaks, right, if it breaks to the upside, it's gonna go way higher, and if it breaks to the downside, it's gonna go way lower. So you can capitalize on that. And The smart thing to do in this case is to wait for the price to break above or below and then to enter your trade. Now you can either stare at your charts all day and try to catch this, right? Wait for the breakout and try to catch it. But what if you are sleeping, right? You cannot stay awake all night. You cannot stand in front of the charts 24/7, right? And the truth is that you don't have to, right? You can simply use a conditional order, which again allows you to enter a long trade at a higher than the current price or a short trade at a lower than the current price. So the way this works is that you're gonna place an order with a trigger price, right? So I'm first gonna show you how to enter a long trade because that's all we can do when we trade spot, right? And then when I'm showing you guys how to trade futures, where you can also short, I'm gonna show you how to set up an order in case this symmetrical triangle breaks through a downside, so you can make money on the way down, right? For now, again, let's focus on how to place a long order. You will type here as a trigger price, a price slightly above the top of the triangle right here. If you are looking at this in real time, that's how you are going to place an order using this conditional order option on the Phemex exchange, right? So at the time the current price was $42,866 and you are going to have to place an order at a higher than the current price, right? You are going to have to place an order something like this, $43,300, right above this top of a triangle right here. So $43,340. So this is the price that you're gonna add right here, $43,340. Then all you have to do is to type here the amount for which you want to buy and just place your order, click buy. So the way this works is that if you were doing this in real time back then, right, you are going to have an order to buy Bitcoin at the higher than the price at the time, right? And basically if Bitcoin then broke to the upside, just like what happened right here, you are going to enter a trade right here, a long trade, and you are going to make good amount of money because you can see that this thing just continued to go higher. So these are the type of situations where you want to be using a conditional order. And that's pretty much how you trade spot, right? You have these three options right here. Depending on the situation that you are in, you choose which option to use. Now let's talk about trading futures. All you have to do to trade futures is go to the contract option right here from the menu and click on USDT and perpetual. Normally what you're gonna have to do first is you're gonna have to transfer some funds in your futures wallet, right? Because you're probably not gonna have any, so you're not gonna be able to open any trades. So all you gotta do is to scroll down here where it says assets, right, and to click on transfer. So now you're gonna have to transfer funds from your spot wallet to your contracts wallet. You have to select the coin. In this case, I think we don't really have USDT, we have some BTC. So we're gonna transfer some BTC. Select the amount, click confirm, and you should be able to see some money here in your assets. Now it seems like they don't allow to use BTC as collateral, so we're not gonna be able to open and close trades with the BTC. We need USDT. Unfortunately, I don't have any, but anyway, I'm still gonna show you how you guys can open trades right here. You have again these same three options right here. You have a limit option, a market option, and a conditional option, right? But as you guys already know, I suggest you to use the market conditional option. So the limit option is if you want to enter at a lower than the current price. You guys already know this. That's for long trade, right? Or at a higher than the current price for short trade. So for example, if I wanna short Bitcoin at a higher than the current price, let's say $55,000, I'm gonna enter here $55,000. I'm gonna enter here the price at which I want to enter my short. Alright, and then I'm gonna enter here the amount of Bitcoin or the amount of dollars that I want to short, right? So the minimum, as you guys can see, is $55. So you cannot place an order smaller than this, right? When you trade futures, when you trade spot, you can, but when you trade futures, you cannot. So $55 is the minimum. And then all you gotta do is also adjust the leverage if you guys have to, right? So you adjust the leverage right here. You can increase it, you can decrease it. The leverage is different for longs and for shorts. You can adjust it. So for example, you can see that right now we have for long trading 2x, for short trading 1x. Now what you guys can see right here is the cost. So since for short trading we are using just 1x, I'm gonna need $55. It's gonna cost me $55 from my own money to enter this $55 trade, right? Because we are just applying 1x leverage. For the long trading, as you guys can see, it's gonna cost me $27. So I have to put $27 down from my own money in order to enter a $55 trade. Because again, I'm using 2x leverage. That's just how this works, right? The higher the leverage, the less it's gonna cost you to enter this position. So if I increase the long leverage to 5, right, and I confirm it, this cost will go down. You guys see now I need only $11 to open a $55 position. The same is for short. If I wanna lower my costs, all I gotta do is to increase the leverage. So I will, if I bring it to 10x leverage, right, the short, then I'm just gonna need $5.55, right, 56 cents in order to open this $55 position. Alright, so that's how the leverage works. Down here you can also see your liquidation price before you even enter the trade, right? So if I enter a long trade right here, my liquidation price is gonna be that much, and for short trading is gonna be that much. That's because I don't really have any USDT available here. If I have, then this liquidation will be different. The point is that that's where you look at your liquidation, and that's pretty much it. All you gotta do to open your trade is, in this case we want a short, right? So all you gotta do is just click on open short. That's how you enter a trade with the limit order. What about market order? Well, with the market order, you guys already know that you're gonna be entering at the current price, right? So if you want to short Bitcoin right now at this price, well, you're gonna be using market order, and again, all you have to do is just select here what do you want your position size to be. You adjust the leverage if you have to, and you click on open short. If you wanna short Bitcoin at a lower than the current price, for this reason right here, so again, if you are looking at a triangle when it's here, well, it makes sense to place an order to short Bitcoin somewhere around this level, $42,317. So basically, if Bitcoin breaks down, right, you're gonna enter a short trade and you're gonna make money on the way down. If it doesn't, just like in this case, well, no problem at all, right? You will just cancel your order. Your order will not be executed, guys. The market conditional order is not gonna be executed in this case. It was going to be executed if Bitcoin broke to the downside, but it didn't, right? It broke to the upside, so the order was just going to stay active and you were just going to cancel it. So in situations like this, it's very useful to use conditional orders. And that's pretty much how you trade futures. Now, if you guys want to learn more about crypto trading, well, the good news is that we have a complete crypto trading course which is 100% free. There's gonna be a link around this video. You guys just have to click it and you will be brought to this page where all you have to do is to enter your name and your email address, and you're gonna get access to 150 video lessons, guys, completely free, proven crypto trading strategies for 2024. No credit card required, nothing, right? Just your name and your email address. If, by the way, you can't find the link, all you gotta do is go to our website, sudincome.com, just like on my t-shirt right here, and click on free course. You will be brought to this same page where, again, you just have to give your name and your email address and you're gonna get access to the course. You can see that people are getting this course all day long and they are learning how to trade crypto like a pro. So don't miss this amazing opportunity. Go ahead, get the course, and I'll see you on the other side.